The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Oh, it's Payroll Friday. Tell me you're not excited by Payroll Friday, and I'll tell you you're watching the wrong channel. I'm Steve Sedgwick, Karen Cho, and Arabile Gamedi, and these are your headlines. Oil prices jump. The US President, Mr. Biden, appearing to suggest Israeli attacks on Iranian oil facilities potentially on the table.
We're discussing that. I think that would be a little. Anyway, we don't allow Israel. We advise Israel, and nothing's going to happen today. We'll talk about that later.
Wall Street on track to break a 3-week win streak at the moment, with investors counting down, as I mentioned, to today's key non-farm payrolls report.
OpenAI reveals it has a $4 billion revolving credit line in place, a day after closing its latest funding round at a valuation north of $150 billion. CFO Sarah Friar tells CNBC financing the AI revolution will be capital intensive.
There is no denying that we're on a scaling law right now, where orders of magnitude matter. The next model is going to be an order of magnitude bigger, and the next one on and on. And so that does make it very capital intensive.
US port workers end their strike action and return to the negotiating table after reaching a tentative pay deal. We'll be hearing from US Acting Labour Secretary Lisa Su at 2 p.m. London time.
Shein declines to comment. That's after seems to be multiple reports then, just with regards to the company there, as well then as where exactly it goes then from here. The company then suggesting the Chinese fashion retailer will hold roadshow events shortly. That's ahead of a potential London listing.
Thank you.
I just thought my first 4 words, perhaps, of the show today, and I've already got myself in trouble with CNBC management probably.
What's that? You got a 9 a.m. meeting today, yes?
Yeah, I'll try and sneak out at 8:56. Yeah. But I kind of thought to myself, but seriously, how can you not be excited about the payroll? If you care about these markets as well, you care about the trajectory, and you care about the fact that VIX has jumped to 20, because there's a lot going on as well. Surely the payroll is the pivotal event for the week. And my headlines are always saying, on track to break a 3-week win streak as well. And it's true, the markets are down across the board. But one big payroll number in either direction, or even, dare I say, in the middle of which, a lot of people looking at Goldilocks, and we've got a guest on this in a few moments' time, that could actually wipe the floor on whatever the moves a week today are already. Yeah,
I did wonder as I was scraping together the stats this morning whether any of this would be relevant by this afternoon, whether all the trades we've seen this week could actually be upended by the data point. And it's funny you mentioned Goldilocks. As I was mentioning that term yesterday, it felt like one from the old playbook. We used to talk about Goldilocks all the time, not too hot, not too cold, just right. And that is the opinion of markets. But what is quite staggering, that view of a Goldilocks type environment is meant to be good for small cap stocks, and we've just heard from a range of different commentators this week saying, yes, and others saying, the small cap space, this is it. But in fact, the performance has been underwhelming. Yeah. You've seen this part of the market underperform the rest of the major boards. So, for instance, on the S&P 500, we're down about 0.7% for the trading week. On the Russell 2K, we're down 2% for the week. So far, Goldilocks, I think people are waiting for evidence today, and that's why it's so important to see this data print today.
Why don't I flag up the fact that John Silver joined us in a few moments' time, and that is my first question to the chief economist of Wells Fargo. What does Goldilocks look like? Here you go. First time I've ever given a question to a guest who's waiting in the wings. Let's have a look at the oil price, because as much as payroll is hugely important for people's anticipation of the trajectory of rates going forward, this story is having huge ramifications, not only in the Middle East, but around the world as well. Oil prices currently trading 77.55, so unchanged from pretty much the highs we've seen over the last 24 hours. They rose around about 5% in Thursday trade. That's coming on the back of the other gains it already had. So look at that, 1 week move. WTI 8% higher, Brent 7.7% higher. Rose 5% on Thursday trade amid continued geopolitical concerns, and as the US President, Mr. Biden, appeared to suggest the US and Israel had discussed strikes on Iranian oil facilities.
We're discussing that. I think that would be a little. Anyway, We don't allow Israel, we advise Israel, and there's nothing going to happen today. We'll talk about that later.
The IMF says any escalation in the Middle East could have serious economic consequences for the region and the global economy. The fund said it's too early to forecast specific impacts on the global economy, but said economies in the region are already struggling, particularly Gaza. Now, to me, that headline comment that Biden does not believe there's going to be an all-out war in the Middle East, that is something that the algorithms can do with that commentary, because it's quite reassuring that the President of the United States doesn't believe there's going to be all-out war. But then if you read down further in the commentary of what he actually said, when he was pressed by reporters as to whether he thought a war could be averted, he drew a metaphor from meteorology, effectively from the weather, saying how confident are you that it's not going to rain? Well, I think when we've all looked out the window, we thought it's not going to rain, and 2 minutes later there's a downpour and we're getting drenched again. It doesn't give you confidence, because things can change on a dime. If he really believes the situation is like the weather, that gives me no confidence whatsoever.
I echo your concerns, and I think the world does, because let us be brutally honest, what has US foreign policy done? What has US Middle East strategy done over the last 12 months? Now, there may be things behind the scenes that means that the US has stopped a wider conflagration, but to the naked eye, it looks like this crisis that began pretty much a year ago, I mean, with those horrendous Hamas attacks on Israel, and then have just escalated with Israel aggressively responding in Gaza as well. What has the US successfully done to avoid escalation here? And I'll just leave that as an open question, because I think a lot of us are very concerned that actually they haven't done enough, or they haven't been able to do enough. It's
the risk of collateral damage here, isn't it? I mean, if you look at the amount of rockets being fired, the latest tally, Israel said Hezbollah launched 230 rockets from Lebanon towards Israel yesterday. I mean, that's a lot of rockets, a lot of firepower. Obviously, we're seeing it from the Israeli side too in terms of their strikes. So what could go wrong here? And it feels like a lot could go wrong in terms of collateral damage, and a retaliation met with more retaliation. This is seemingly not having an end. At what you would imagine would be a very tricky positioning in terms of timing for the US. They must be applying some heat trying to get a resolution. The fact that they haven't suggests that the Israelis definitely want to achieve some sort of outcome very quickly. But whether that's even possible, I mean, we were talking many months ago at how stretched they could be. Yet now we're talking about troops and an onslaught against Lebanese targets. So surely the Israelis are becoming stretched at some point.
It's not the number one political issue in the States. It's not number 1, 2 or 3. I think one could argue that economy, immigration and women's rights are up there as 1, 2 and 3.
As well.
I don't think most Americans vote on democracy. I think they vote on the economy, immigration and women's rights at the moment, from what I've been seeing from the polls anyway. But it will have big ramifications. If the oil price goes up, that can affect gasoline prices. That can affect voter intentions as well. If we don't have a wider conflagration, if we don't have Iranian facilities hit, and there is a calming down of tensions between these two regional superpowers, what does that mean the oil price is doing? That's kind of what I'm really interested in. We were talking to Amrita and others, Amrita from Energy Aspects yesterday, because the demand side looks very sketchy. The spare capacity side from OPEC Plus looks very elevated. They have a lot of spare capacity, 5 million barrels a day, etc. So there's a lot of reasons why the oil price could potentially resume its downtrend if indeed this war is hopefully avoided getting more escalation.
Which makes it an economy issue, though, doesn't it? Because if you do see the worst case scenario and oil prices spike from here heading into the election, then no doubt this is an inflation issue, it's a consumption issue.
In the meantime, we talked about those markets, and again, it's all to play for in this session ahead, and also for more on the oil outlook and what any further escalation in the Middle East could mean. Check out CNBC.com. In the meantime, relatively flat markets yesterday, Karen.
We did just give back a little bit of territory on the major boards. Flat on the Nasdaq, about 4/10 plus down on the likes of the Dow. To me, what was interesting was the moving stocks as we saw the market in decline. For the likes of the Dow, it was Goldman Sachs. And you may have heard me point out before, when you see a market that moves to the upside, often it's Goldman Sachs that is moving for the Dow. It's Microsoft that's moving for the S&P and beyond. But it was to the downside. It was Goldman Sachs leading this market lower for the Dow. On the S&P 500, it was the big chip name that everybody's talking about, out, it was Nvidia losing steam. Actually, most positive it was Nvidia, I should say. It was Amazon that was losing steam. And in terms of Tesla, that was one of the big drivers for the Nasdaq. And we'd had that precursor given the miss on deliveries. That was one of the stocks that the market was watching for the Nasdaq yesterday. So big market day today as we count down to non-farm payrolls. Already there's been some movement at the short end. If we take a look at bond markets, the 2-year has strayed from last week's level. We were ticking around the 3.56% level last week on Friday, and you can see we've escalated to 3.7. So watching the day today, all important for the bond markets. Treasuries, as a result of this slight tick high that you're seeing on some of these trades, the yield supportive story. Dollar has been making some gains this week, and if you look at the crosses, euro dollar this morning, again, more slippage, so some positioning ahead of that payrolls report. We're 110.26. Cable on the front foot, though. It's managed to pick up a little bit of territory morning session. Dollar slipping versus the Japanese yen, but that's where there's been fairly significant moves, as suddenly we're now dealing with a slightly more dovish Prime Minister, who many had assumed was some sort of monetary hawk as he was taking office in Japan. So that has had big moves and big ramifications for Japanese equities and the currency this week. Elsewhere, dollar trades down versus the Swissy. Asian markets, now I mentioned the Japanese stock market. Here's how we're perched. We're up about 1/3%, but still a loss-making week for Japanese stocks, one of the worst trading weeks in a month for that market. Hong Kong stocks still rallying up more than 2%. Kospi firmer, the Nifty 50 fairly flat, Steve.
Super, Karen, right. The US services sector turned in its strongest performance in more than 18 months. This according to the Institute for Supply Management data, with non-manufacturing PMI accelerating to 54.9, higher than expected and up on the month. This as weekly jobless claims rose 6,000 to 225. But to be fair, the weekly jobless, I mean, there's a lot going on. You know, the hurricane, the concern about the port strike. So I don't know if that's that big an increase given all the backdrop. Anyway, this is investors look ahead to, we may have mentioned it, today's non-farm payrolls figure expected to show a slight uptick on August. John Sylvia, excellent, CEO and founder of Dynamic Economic Strategy and former chief economist at Wells Fargo, joins us. Now, John, really nice to see you. I know you were listening earlier on as well. We've said a lot already. What does Goldilocks look like in today's data? Nice to see you, sir.
I think that was an excellent intro. Goldilocks to me, 130,000 to 170,000 jobs. The unemployment rate stays at 4.2%. I think those are the two key numbers that certainly the market interprets that Powell will really focus on that unemployment rate. So Goldilocks, 130 to 170, I think is a fair assessment.
There's been a couple of months where the market's been spooked by some revisions to the data. What are the chances of this time around seeing these revisions and it's suggesting some sort of cooling at a faster pace than the market would like?
Yeah, I think that was one of the good surprises with respect to the market in the last report, because those revisions really said the labor market was cooling, and that prompted an expectation in the market, at least, that the Fed was going to ease a couple of times. And then in the commentary from the Fed, there seemed to be a lot of focus on continued lower federal funds rate in the future, not only the rest of this year, but early next year. So I think those revisions were a big part of the story. We'll see if we get more revisions now. But really, Goldilocks, I think 130 to 170 on the headline. And if there are no significant revisions, I think that'll be the bottom line story.
John, we've been pondering Goldilocks, and Steve's mentioned again in the first question, but the Goldilocks scenario hasn't really been supporting small and medium-sized companies this week. Why do you think there's still a little bit of caution around the soft landing scenario, and is that the right approach?
Yeah, it still has to be the right approach. I think the small firms face significant cost pressures. When you look at the NFIB survey, when you look at, for example, the CFO survey published recently by the Federal Reserve Bank of Richmond, both of those surveys suggest that at the business level, not the macroeconomic level, but at the business level, there are significant cost pressures. I think when you folks just focused on the price of oil and some of the supply concerns, once again, that leads firms to be very cautious on their hiring. Are my energy costs going to go up? Probably yes. Can I find the right employees? Well, it's kind of difficult. So in both cases, I think there is a lot more caution at the small and medium-sized firms.
Yeah, dangerous to let go of workers and not be able to refill those positions if things look better, John. John, absolutely. We talked about energy costs. We talked about strikes, real concerns for those making the financial decisions across America. But what about the election? I know you flagged it up in your notes as well. Will people really delay investment decisions ahead of early November?
Yes. The CFO survey basically said that they will delay some decisions in terms of investments and hiring. I think we can all appreciate that both candidates have really said they will make changes. Could be changes in corporate income tax, could be changes in regulation, could be a focus on subsidies for certain types of industries, and then tariffs. Tariffs are a huge issue with respect to the cost of goods. As all of us know, the U.S. actually imports more goods than it exports. So to have a tariff suggests that the prices of those goods in general will go up, at least for a short period of time, but prices tend to stabilize at a higher level over time. So yeah, that has to be a big concern. And I think you're right. I mean, the number one concern, I think, in politics and the election is the overall economy. But I think one of you mentioned also about the women's situation. Yeah, there is a really significant concern that the women's vote goes the way the abortion vote goes. And that's not economics, but I think you folks made that point, and I think it's something that is relevant to the issue.
John, everyone's looking at the last election saying, well, it was contested by the former president, Mr. Trump, and that could lead to delays, that we don't get a result on November the 6th, I guess, the day after the election. But I'm actually more interested in many ways in what happened in the year 2000 election, you know far better than I do. And this is Gore versus Bush as well, because actually we didn't get a clear focus on what was going on in Florida until mid-December. Do you have concerns, given what you just said about that CFO survey on investment decisions, and the tightness of the race for the Senate, the House, and indeed the presidency as well? We may not get a clear-cut decision for a long time.
Yeah, I think you're quite right there. And quite frankly, given how polarized the U.S. society is, given how much it appears as if the lawyers are going to be called upon to get involved, I think politicians in both parties have figured out that, hey, if it's close, we're going to get the politicians involved. So, yeah, I don't expect that there might be a clear vote in terms of the U.S. House, especially as of election evening and the day after. I think that's going to take a while. It'll be, again, subject to a number of legal suits. So, unfortunately for the voters, they may end up knowing who the president is. They may have an idea about the U.S. Senate, but remember that tax legislation in the United States comes out of the House. And if the House is still uncertain, then anything with respect to tax legislation is also uncertain.
John, just a quick one on the oil price. We're all closely watching it this week on the eve of an election. What's the relevance?
Oh, the relevance is enormous in terms of the U.S. economy. And I think your point earlier was higher oil prices mean higher gasoline prices. Higher gasoline prices in front of this election is a concern for Harris, I think more than Trump, simply because that is so visual to the American consumer. They go to the gas pump once a week, maybe every other week. It is right up front for the American voter.
Sylvia, so nice to catch up with you again. Thank you very much for joining us. John Sylvia, CEO and founder, Dynamic Economic Strategy, and former chief economist, Wells Fargo.
And you can head to CNBC's website for plenty more on what you can expect from today's non-farm payrolls print. Arabile, what's coming up?
Well, Steve, coming up on the show, a new credit line takes OpenAI's total liquidity to more than $10 billion. We'll bring you the details on that and more after the break. Plus, now, EU officials get set to vote on tariffs for Chinese-made EVs. It could be very, very significant. We'll have more on that and what you can expect. And we'll dig into the outlook then for recruitment and the impact of AI with Workday's CEO there. That exclusive conversation is coming up at 8:30 London time. Stay tuned.
Funny old company, OpenAI, isn't it, in many ways? It secured a new $4 billion revolving credit line, which takes its total liquidity to more than $10 billion, with the option to increase it by a further $2 billion. It follows Wednesday's news that it had closed its latest funding round, valuing it at $157 billion. Okay, we'll go to a bit of sound, but I want to pick up after that as well. Speaking exclusively to CNBC, OpenAI CFO Sarah Friar said building up the necessary data centers for the development of artificial intelligence will be extremely capital intensive.
We have really big aspirations of how do we keep investing in what drives this technology. It's compute first, and it's not cheap. It's great talent second. And then, of course, it's all the normal operating expenses of a more traditional company. So to that end, we do want to make sure we're being creative in where we can go to tap capital. To your point, sometimes that's public markets, sometimes that's debt markets, sometimes it's project finance, structured finance. There's a lot of things that I need to get my kind of fingers into as I look forward over the next several quarters. But I think there is no denying that we're on a scaling law right now, where orders of magnitude matter. The next model is going to be an order of magnitude bigger, and the next one on and on. And so that does make it very capital intensive. It's a really different technology cycle than if you think about the last cycle, which was much more bits and bytes, a lot cheaper. Mm-hmm. This is much more like the telephone being brought, dropping cables, electricity going up, the railways. I mean, I think you're in much more of that sort of capital intensive cycle. And that means for us, too, we're going to have to really be careful and smart about how we raise money. Problem is, all the original railway companies went bust. There was huge consolidation at the end of the 19th century, led by bankers, actually. I did a big book on this one. But a lot of the original railway companies, they went bust with their capital intensity as well. A lot of the original telecom companies who have laid these fibres, as we've been talking about this entire century pretty much, are struggling to monetize it as well. My thought is in the car, I'm trying to have a few thoughts in the car as I'm driving in the morning. And one of them was, you got a $157 billion company. Wow, that's amazing. It's a great company, $157 billion. And it needs a revolving credit line? Mm-hmm. Where's the free cash flow? And I think there was so many answers from Sarah Friar. It was a great interview in many ways. It was like, oh, well, we're going to be very, very capital intensive. We need to build out as well. And we need orders of magnitude going forward. Well, their rivals are sitting on the biggest cash reserves in history, the likes of Google, the likes of Microsoft, who are rival stroke customer stroke partner as well. So I'm just saying, that was the lady that made the quote, not me, that about railways and telecoms companies. Not necessarily the best analogies.
So to me, this is an example as to why you need to listen very closely when we go to these technology events, because we were telling you back in May and June that this is a very expensive build out. I mean, that was one of the intels that we gleaned from VivaTech, that this is not like other technology cycles, because the cost of bringing compute, which is necessary for these AI functions, is incredibly expensive, which is why these fundraising rounds, even from startups that have barely been in existence, have barely taken their first breath, they're raising a lot of money because of the cost of needing to have these operations. So that is going to be a feature, and I think that's why recently, after you've seen these huge valuations on some AI stocks, there are questions as to whether you can ever pay off as some of the amount of money raised, whether it's ever going to make economic sense. So I think that question is very much in the market. A couple other points here. You've got just nipping at the heels of OpenAI is Elon Musk, and again a big outing yesterday.
He's
talking
angry.
about he is, and
he's angry.
But the ramifications are here. He wants to open up the garden. So you've had a very walled gardens, you've had very closed operating environments for the generation we've just seen. And I think some of these companies are trying to carry that forward to the next generation with AI. Elon Musk and Mark Zuckerberg are both two major players out there saying, no, this is going to be open source. And the comment from Elon in Musk in recent hours was saying that as soon as they get this XAI up and running to the point where they want it to be, 9 months after the release of the technology, they're going to make it open source. So that is no doubt going to destroy some of the profitability cycle that you're going to see for companies like OpenAI that want to keep it
There was
private?
a guy in the mid-90s who was a financial guru who said something that I've never heard said better. His name was Cuba Gooding Jr. And he said, show me the monetization, or words to that effect. Show me the monetization. Down the phone. He was yelling down the phone at, I think, his agent or something.
Show me the money.
Well done, everyone's just remembered what it was. Yeah, well done, Adam. Yeah, Jerry Maguire. Okay, coming up. Adam's the director, by the way, not some strange voice in my head. Well, actually, he is a strange voice in my head and my director.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.